Hey guys, welcome to my channel. On this episode, we'll be taking an in-depth look at my September 2020 M1 Finance portfolio overview. And for this month, I actually did make some changes to my account. And so we'll go over this in more details and I'll give you a little insight as to why I made this change. Hey guys, welcome to my channel. If you're new here, I'm Romel, and on this channel we talk about all things related to finance, investing, and building wealth. We discuss mindsets, strategies, techniques, and resources to help you in your journey to build wealth. If you haven't yet, please subscribe. We produce new content every week. Alright, so if you looked at one of my previous videos, one of my recent videos, I talked about some strategies that investors could implement if they weren't sure about how they felt about the market conditions. Usually I give you guys weekly overviews as to what type of stocks I'm buying, but actually last week I took my advice and I actually didn't buy any stocks. Well, aside from the $100 automatic contribution I put into my M1 Finance portfolio. And that's for a couple of reasons. The first is that if you look around, I actually do have a new background, and that's because if you looked at my other video, I actually turned the previous room I was recording in into the nursery. And that's because we're actually expecting our baby girl in January 2021. So that's the whole reason why I have a new background. I basically moved my computer and my computer desk into the living room because we have a small 2-bedroom unit. And now we're getting ready to make our daughter's nursery. And so with that being said, that's one of the reasons why I didn't invest money into my Robinhood account. And for those of you that don't know, with my Robinhood account, that's where I go and I buy individual stocks. Whereas my M1 Finance account is basically a portfolio that I already have set up, and I have percentages assigned to each company. And I basically just deposit money and let it do its thing. It basically automatically buys stocks, redistributes it, and balances my account just to make sure that it's more or less in line with my actual portfolio. Alright guys, so now let's take a look at my M1 Finance account. Let's take a deep dive into all of my holdings and percentages, as well as the performance that it's seen over the past month, September 2020. Alright guys, so if you take a look at my account, my current portfolio value is $2,406.46. My current market gain is $233.07. And percentage-wise, I'm basically up 22.74%, which is great. A lot of the things one of the biggest things I say is that the money that's invested is money that's either growing or depreciating. But obviously, because I have companies that I believe in and I'm trying to hedge my bet and mitigate my risk, I'm seeing some great returns. Going back into my portfolio, I have a whole bunch of different companies in it. The first one is Berkshire Hathaway. This is an expert pie that I have in my account. Currently, it's at 42% of my total allocation. This one is seeing some good returns at 23.73%. If we go into the actual slice, you'll see that this is made up of a lot of different companies. Apple is one of its holdings. You can see that it's up basically 52%. American Express is up also above 20%. Coca-Cola is up above 12%. And Coca-Cola is one of those Dividend Aristocrats, or companies that issue dividends and have shown great track record of issuing dividends. So if you want to invest in a great dividend company, Coca-Cola is one that you'll want to look at. So now here is the change from last month. Bank of America is seeing a positive performance. I know a lot of the bank sector got hit with this whole pandemic, and now it looks like this month, at least this snapshot of this month's performance, is seeing some great returns. Overall, I have a lot of companies in the green and only 4 companies that are seeing some negative returns. And again, because there is a lot of companies in this expert pie, I'm mitigating my risk by having a lot of these companies. All right, if we go back, we'll take a look at my Dividend Aristocrats. These are basically what I said, dividend companies that have shown great track records of issuing dividends. The overall slice in my pie is up basically 8%, almost 9%. You can see that a lot of these companies are in the green, which means that I'm seeing positive market gains. With this, I only have about 10 that's in the red, which is okay. I mean, these are companies that I'm going to hold for a long term. Generally speaking, all the companies in this M1 Finance portfolio are companies I'm just going to, ride with for a long time. So I'm not going to do any crazy selling of these stocks, at least not yet. If you look at one of my other videos, one of the things that I mentioned is that if there is no news that you disagree with, and if there's no company news regarding moves that you might be against, then why would you sell your stock? If you're selling it because you just see negative performance, but you invested in the company not because you're trying to do like some quick day trades, but because you believe in them, which is the type of investor I'm in. I'm a long-term investor, and so I generally invest in companies that I believe in. So if there's nothing in the news or there's nothing that the company's done to dissuade you or to change your mind about your decision in investing in them, then why would you sell that stock? Is it because you're only seeing is it because you're seeing a red day or negative performance? Well, if that's so, then you should reassess your investing criteria when you make your stock picks. But I digress. All right, so let's go back into my portfolio. All right, so Berkshire Hathaway and Dividend Aristocrats are two of my biggest slices. The next one I have here is Tesla, everyone's favorite tech stock, especially in the past, I'd say 3 months. There's been so much news, so much increase in their performance. You could see here, I mean, I don't have that much in terms of a dollar value, but performance wise, it's up basically over 200%, which is crazy. It's times like this where, people would have wished they put more money in the stock, but you got to remember, you're not always going to pick, big winning stocks. So when you're putting money into your portfolio, put it in a way that makes sense to you. If you're more risk adverse, then don't put that much into it. You can see here that the individual stock picks I have are small percentages of my overall pie, and the bigger positions I have, Berkshire Hathaway and Dividend Aristocrats, are basically my way of doing an ETF. One slice that has multiple companies in it, and that's the way that I basically hedge my bet or reduce the volatility that I may see. All right, next one I have here is Vanguard Total Stock Market ETF, VTI. This is also seeing some great performance at 20% increase. Shopify is another great one. If you haven't looked into this company, then it's one of those sleeper stocks that is really riding the wave in terms of technology and e-commerce. They've partnered with Walmart recently, so there's been great. I'm not sure if that's one of the main reasons it's seeing a great gain, but it definitely helps. All right, so VYM, this is ETF, Vanguard High Dividend Yield ETF. This is also seeing some great returns at 8%. Realty Income Corp, this is a great dividend company. A lot of people online and in general like this because they're a pretty high yielding dividend company. This is seeing some great returns at 22%. And 5G stocks, this is another one of my slices that has a whole bunch of companies within them. These are basically all tech companies. So Nvidia, Qualcomm, Marvel, if you see in here, there's a lot of green companies. Some companies aren't seeing that great of return, but that's okay. Again, these are long-term holds. All right, and so my biggest change to my portfolio is this last company, Snowflake. Right now, I added this at 1% of my total portfolio, and one of the biggest differences or biggest things is that it's up. It's up 6.93% at the time of this video, which is huge considering this is one of the companies that had a really big hype, a big following to it. So when it actually IPO'd at a really high price. Just to give you guys some background, I'd say a week before it released, there was some news saying that the release or the stock price was going to be anywhere from $75 to $85. A few days before, or like 2 days before it's released, it said that it was going to release at $120, which is, a $40 increase from the previous post. And when it actually released, it came out around $250, which is basically quadruple the initial price of $85. So there was a really big discrepancy in the type of information and the stock prices that everyone was getting. So it's surprising to me because based on my pie, it looks like I'm buying it at an average share price of $224, which is great because I'm seeing some positive returns. Obviously, if you bought it at its highest price, which was around, I believe, $320, then you're probably in the red right now. But at the time that I added this to my portfolio, I added it at a great time because it is seeing some great increases. All right, now let's go to my portfolio metrics. So the net cash flow is $2,186.55. The market gain is $219.91. Market gain is gains that you see from the performance of your stock. So if you're increasing, then you're going to have a positive market gain. If it's decreasing, then you're going to have a negative gain. And the market gain is, or my total gain is comprised of two things. One is the market gain, which we just spoke about, and two is earned dividends. And earned dividends is passive income that basically company that you get from investing in certain companies. For those of you that don't know, dividends are basically money that gets issued to shareholders for investing in companies. So for example, I invested in Coca-Cola. They pay a dividend. I'm not sure what percentage. I don't know off the top of my head. But basically, I get a certain amount of passive income for investing in them. And so that's what earned dividends is. All right. So that is an overview of my portfolio. A couple of key takeaways. I say this every week. Look, you just have to be consistent with the way you invest. This portfolio, I started with $100. And I think the first video I made probably showed an account value of around $300. So from the time I made it till now, there's been a big increase. I've increased it $2,100, and that's not all from market gain. My market gain is only $200 somewhat of that, but the real key and the real strategy to investing and to being successful in investing in finance and all that personal finance stuff is consistency. With my M1 Finance account, I basically do automatic deposits into that account for $100 each week. So that totals to $400 a month. And that basically gets automatically invested into the different companies. That's the thing I like about M1 Finance is that I basically say, hey, I want to invest $100 every week. M1 Finance, take it and split it up into the portfolios I have. So it's a really easy way to automate your investing. So that was the whole big takeaway. So I'm seeing some great gains. Obviously, you're not always going to see great gains. Another key takeaway is if you want to mitigate your risk or kind of, reduce the volatility, then you should have multiple companies. So that way, if one company goes down, you're not going to see a big decrease in performance. However, the inverse is also true. If you're looking to make big gains and you're fine with your risk and you have a very high risk tolerance, then go ahead and have like 4 companies and put your money in, and you could either see big losses or big gains. So it's all up to you. Figure out what type of investor you are and do your thing. Yeah. So big take, and the last big thing that just to summarize this whole video is that the biggest move that I did to my portfolio is I added Snowflake into my portfolio because that's one of the big tech companies that I think will be seeing some great returns on. So it's only in there at 1%. I brought down the percentage of one of the ETFs. I think it was the high dividend ETFs. I brought that down to 9% so that I could add Snowflake at 1%. And, I'm seeing some great returns, which is good. All right, guys, that's what I have for this video. Thanks for watching. If you stuck around till the end, I really appreciate your support. If you haven't yet, please like, comment, and subscribe down below. Your support, feedback is really appreciated, and I really try my best to reply to every comment that I get. If you're looking to connect with me on other social media platforms such as Facebook, Instagram, or Twitter, I'll leave links in the description down below as well. All right, guys, thanks for watching. Really appreciate you guys, and I'll see you on the next one.